Welcome back to Ferocious Education. This is Zed. Today I'm going to be covering Castor Maritime, going with the ticker CTRM. Make sure to drop a like to this video to help this channel grow, subscribe, and leave notifications on. And let's jump right into this one. So, Castor Maritime. There's quite a bit of things to say about this one here. I'm going to save a bit of it into the end. We're going to go through due diligence a little, some of the recent updates, why it has run, their financials, what to expect in the future, as well as then following that a technical analysis portion. So, jumping onto this one here, we can get to see some of their current bulk carriers, the Magic P, the Magic Sun, the Magic Moon, Magic Rainbow, Magic Horizon, and Magic Nova. In the previous video a while ago, I did track each of them, but I think that doesn't have really any point to go ahead and give these a track, just because we're not really interested to where they are exactly at the current time in the Pacific or Atlantic Ocean, wherever they might be right now. And so some of the latest news here, I'm going to go with the very recent ones, their vessel acquisition. So ever since I remember about CTRM, even somewhere through mid last year, they acquire vessels. Well, it makes sense, right? They're public vessel companies or a maritime company. So they have this 2009 built Kamsarax dry bulk carrier, for $14.5 million, another one 2010 for $15.85 million. They also have a $15.3 million financing that is with a bare interest of 3.3 plus LIBR per annum. And the big thing about this one here, and this is another acquisition at $17.5 million. And the big thing that you need to be very careful about this one is offerings. Ever since I remember CTRM, I remember offerings. It's a dilution machine. And why is that? It's because vessels really depreciate on time. And banks usually stay away from that. But when they're a public company, they can just keep on releasing public offerings. There's another one. And basically, they keep on financing or raising funds for these vessels. In a way, it works, but not in the stakeholders' benefit, or at the end of the day, raising the prices of the stock. It's more of diluting it and making the book value worse. Now, Castor Maritime receives 180-day extension for compliance. This goes all the way to June 28th, and they need above $1 for 10 straight days. Now, how likely is that? We'll cover that in a minute. Now, before moving on, we can go back and check some of the latest news further on from this one here, including their previous reports, their annual general meeting, the Magic Nova, and the new charter agreement. So basically, as you further go, you'll find a couple of things: debt financing, offerings, and vessel acquisitions. That's very much the exact same thing. The PR ship keeps going on and on and on. Now, moving on towards a little bit of their statistics. Now, their market cap, by the way, is $383 million. The price over book is 187, which is, to be fair, lower than the SP 500. The SP 500 is somewhere between 2 and 3. So this one actually is cheaper on book, or price over book, around 187. Yet the price over sales here is around 35, which is multiple higher than the 2 to 3 of SP 500. Now, you might think, okay, well, the price over book is really good. You got to keep in mind the price over sales, but big problem with this one is that the book value depreciates at a heavy rate. Now, moving on towards the financials perspective, remember, these ones change way too often because they keep getting vessels, they keep raising capital, But we're only looking for their general trend. First off, year over year, the revenue has been increasing, yet their total expenses here has also been increasing. So their normalized income has been on almost a margin thing, but around $1 million a year, generally speaking. Now, quarterly, we get to see their revenues have been somewhere around $2.5 million to $2.9 million at more of a fixed rate there. Now, their operating income there is around negative $314 million in the last one, but over the year, they've been positive, generally speaking. Now, normalized income, they've been marginally at somewhere negative 100,000 to $500,000 every quarter. Now, balance sheet here, where we're interested in their total assets on a yearly basis, you get to see the total assets has been increasing Their total debt, it only shows the last year, so we're going to ignore that a little. Their quarterly, what we get to see is their total assets has been increasing. Their total debt has been stable. Now, that's a good thing, but it's also a part of the constant dilution. So that part will, of course, going to raise more total assets, or more cash goes on to assets. But again, the stakeholders or the shareholders are the ones that end up footing the bill through their shares being worth a little bit less. But it looks like the market is just brushing this off, and we're in an age where offerings, I think, doesn't mean anything at this point. So keep that in mind. Institutional buyers in 2021, we have around 15%, including from Savvy Management. Now be careful of Savvy Management. Basically, you don't want to swim in the shark's water, and Savvy Management is a shark. But anyway, Empire Assets has 9.9, almost 10%. Intercoastal Capital has around 10%. You get to see institutional buyers are very cautious about this one. 2021, we have an addition, but generally speaking, there has been some pullouts here and there in 2020, at least in the last couple of months from 2020. Now, SEC filings will give you the exact same news that we've just covered. The acquisitions here, this is $700 million in registration for the offering. So keep in mind, that will bound to be hitting on and on and on and on. I mean, their main goal is to raise capital through offerings. And so that's something to keep in mind. This is offering news. Offering news. Oh, actually, this one is the $15.3 million debt financing. This is the debt financing at 330% and warrants and offerings. So you get the picture. So now we gotta go on to technical analysis. On a technical analysis point of view, before we do so, make sure to please subscribe and leave notifications on. It helps my channel a ton, bumps me up in the algorithm, and it's not just about boasting my ego. It's just about making sure this channel grows and giving me motivation to keep doing these videos. If you'd like to join our Discord, feel free. It's a chat room. There's no pumping allowed. We're very much friendly there. Now, on a 1 week perspective, what we get to see here is that the 30 EMA is still above the 10 SMA. Now, that is bearish, but that gap is closing down fast, and that's a good thing. And so moving averages are bearish, moving on towards bullish as we go. And I expect the next couple of weeks, it will turn fully bullish. Now, the ADX shows in a potential here of a strong trend forming at 30.18. This shows in that there is an actual positive trend above 30. That's the case. Willing percent R has been overbought for a little. MACD has been a bit stable, and the momentum looks quite nicely here. On a 1 day perspective, things are looking a little bit different. The 10 SMA is above 30 EMA, incredibly bullish. We're about to get a golden cross in the next few days, which is a very bullish point where the 50 SMA crosses the 200 SMA. Now, the trading action zone where positive reversals are likely is between 60 cents and 44 cents. Keep that in mind. ADX is above 50, and it indicates that either accumulation or a pullback is set to seen, and we get to see accumulation seems to be the winner here. William percent R shows this one to be somewhere closer to the overbought section, yet is accumulating around that area, and momentum looks quite nice. Now, on a 2 hour perspective, things are looking a little bit more from the accumulation side. Everything looks like it's accumulation. ADX doesn't really show a strong trend. MACD looks like it's a bit sloppy. Momentum looks strong, but it seems to hit that high and then drop the next day. Moving averages are all almost extending to one another at this time of time. And so we get to see that it is more of an accumulation period rather than a bullish outbreak. Now, on the moving average bands, you get to see 51 is on the top, 47 and 42 in the bottom. Now, technically speaking, that doesn't really mean anything. As long as it's actually staying upwards and moving on the right track, that's all we're looking for. Stochastic fast and stochastic slow are both showing accumulation with the potential for another leg up. Now, the chart on the Fibonacci retracement shows a significant support at the 74 cents, followed by 61, followed by 51, 42, 31. Significant resistance lies at the 90 cents. Now, if we were to go ahead and draw significant supports and resistances, we'll start with the resistance. 77 cents seems to be a historical resistance, followed by 98, followed by $1.18, followed by $1.26, followed by $1.48, and then jumping all the way up to $1.74, $1.94, 203, 215, and 236. Now, significant supports. We get to see historical support, 65 cents here. A very weak one of 53 that might actually break right through. Another weak one of 47. Strong one at the 40, I would say the 40-cent mark. Below there, we're looking at 36. Below there, we're looking down at 30 cents. Below there, 25. Below there, 20 cents. 18 cents. 15 cents. 13 cents. And then all the way down, 11 cents. Now, coming to the question to Ed, what do you think about this one? Before doing so, we're going to do one other thing here quickly. And what we're going to do is try to find if there's any pattern or channel here. Now, technically speaking, this would be your trend line here. And your current latest channel would be something similar to here, right on about this line. And you get to see that we have a shift here, where we literally ended up getting another channel around this area here. So it's an interesting thing where you see a massive run around here, and then it basically accumulates into here. So Ed, what do you think about this one? Definitely long-term investment. I don't like this one. I remember when I started trading, this one was more of a scam thing. 2018, look at 2019. This was around 19 bucks at a high. Let's say 8-9 bucks. Going down to around 11 cents. This company's in trouble. And generally, I don't like vessels. Vessels, generally speaking, they're a little bit outdated. Their technology isn't the best. They're not adjusted to clean energy. Now, they always can just register in some random island and bypass some laws. But generally speaking, they depreciate in value quickly. They aren't the best capital. And it's a little bit iffy for me. That's for investment. If I don't believe in a product, I don't go in. That's how we keep it. Now, on a trading perspective, do I see that it might actually get a hype and perhaps beat up $1 or $1.20? It is possible. Or $1.76? It is possible. But generally speaking, I'm not holding my guns on it. I'm not someone who's basically saying, yes, for sure, but it's a risky play. So if your risk tolerance there is good enough, then throw some money at it and expect to lose it all or to multiply it. That's the end result of this one. What do you think about this one? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day.